Very good afternoon, everyone. I hope my voice is audible to everyone clearly.
Yes, ma'am.
Okay. So, myself, Anika Valicha, I'm going to take your sessions for advanced accounting. Your complete syllabus for advanced accounting has been divided into 3 different modules. Today, being the first session, we are going to start with the first module, in which 2 different topics are being covered. The first topic is about hire purchase system. So today we are going to learn about this hire purchase system. So the topic that we are going to cover in today's session are being there. You can have a look at the topics, which basically includes the meaning of the system, the comparison with the similar form of installment system, the accounting treatment, how it would be done in the books of a vendor and purchaser that we are going to see, the different methods which are used for the purpose of hire purchase method accounting. So, starting with the introductory part, what do we mean by hire purchase system? We all are aware about a system called as installment system. Okay, each and every individual has a clear vision about what installment system is all about. Can anyone of you give me some idea about what do you mean by installment purchase? If you are aware about that system, the concept of that system, you will easily understand this hire purchase system. The one difference is there. So, any idea about what do we mean by installment purchase? We are aware everyone do that uh, now and then. You buy your electronics, you buy your cell phones on installment. Now everything is available on installment system. So can anyone of you give me some idea about what do you mean by purchase installment? You can unmute and speak. Otherwise, you can even write it in your chat box. What do you mean by installment purchase? Yes. In a very simple language, whatever you know about installment purchase. Yes, anyone? Yeah, I got one thing. It is an agreement used to finance the acquisition of assets. Okay. Can you explain the procedure, how the installment purchase goes basically? That is the very correct meaning of installment purchase. See, in the very previous period, there was a system called as barter exchange. Okay, where the goods were exchanged for goods. Slowly and gradually, cash system came into the scenario. Okay, where goods were exchanged for cash. Now, being the needs of the human being being increasing day by day, it's not possible for every individual, specifically for the, we can say, middle class individuals, to opt every demand to buy every needed product on cash. When we see from the outlook of the rich individuals, for them, it's not a big deal. But when we talk about the middle class and lower middle class individuals, the demands are very high, the funds are very low. Okay. So under that scenario, what happens basically, in order to make the things available for them, this system has been brought about known as installment system. What you tend to do, you can purchase the product just paying a smaller amount, okay, which is known as the down payment, and rest of the amount you can pay afterwards in monthly installments. Okay, obviously you have to pay something. Nowadays, even there is no interest charge also there for installment. So interest-free installment is there. Okay, but you have to pay the rest of the amount in small equations, in small quotes. Okay, you can pay it monthly, quarterly, 6 monthly, depends upon what agreement or what contract you have undergone. Okay, that is basically the installment system. One of the similar kind of system is known as the hire purchase system. The difference basically you will find between two is that when you make an installment purchase, if for example, I visited a store and I bought a new phone for myself under installment. Okay, it was for say 50,000. I have paid 20,000. Remaining I'll pay in installments. Every month I tend to pay some amount. Okay. So that is installment. Now on hire purchase also, I can make the purchase of that goods. But the difference is that when you make an installment purchase, you get the possession of goods also. That means good is with me. Cell phone is in my hand. Apart from that, you get the ownership of the goods also. That is under installment purchase. But when we talk about hire purchase, you get the possession of the goods. You get the right to use that good, to use that mobile phone, but you won't get the ownership. The ownership is transferred after you make the payment of last installment due. When you clear all your installments, after that, you can say the ownership is transferred to you. That basic difference you can find between these two systems of hire purchase and installment purchase. That there is no transfer of ownership with respect to hire purchase, and in the installment purchase, you get the ownership as well along with the possession of goods. Okay, you can possess the goods, you have the ownership, you have the right to use the goods. Okay, obviously, payment of installments is mandatory on both the cases. Under none of the case or under none of the system, you can say, I'm not going to pay the installment. No. Okay, you have to make the payment. Okay, but under hire purchase, what happens now? If you don't want to continue with the contract, if you are not at all now interested in buying that product, if you have possessed that product, but your use for that is finished. Now you don't want to keep that product with you. You don't want to continue with that. So you can stop making the payment of installment. After that, what will happen? The vendor, the seller of the good will come and will take the product away from you. That is his right. Because you are the defaulter, you have not paid the installment, you are the defaulter. So the vendor here is known as the seller. The seller or vendor of the good has the right to take the possession of your good also. Possession was with you, ownership was with the vendor. So along with the ownership, he has the right to take the possession of goods also from you. So you are no more holding the product, you don't have the possession, you don't have the ownership, you don't have even the right to use that product. That is what happens in under hire purchases. This is just the rough scenario of basically what the hire purchase system is all about. Okay, now what usually happens over here. So for example, I'm under the manufacturing business. Okay, I am manufacturing goods. I'm the manufacturer of certain product. Okay, I am in need for some machinery. Okay, now when we talk about the machinery for the purpose of manufacturing, it won't cost a very, we can say, smaller or decent amount. Obviously, it will require a huge investment. Okay, obviously, I can't buy it at once. I can make it in the form of cash purchase. I can't make the lakhs of payment in one go and buy the machinery. I am aware about that Mr. A is having that machinery and he is able to sell it on hire purchase system. What option do I have? I can approach him. I can request him to sell that machinery to me on hire purchase system. We both will enter into that agreement of hire purchase and we will agree on what amount I need to pay every, say, monthly or whatever will be the terms which will be agreed on both of us. Okay, in installments. Okay, so what amount I need to pay every month or every 3 months. Okay, and up to what period of time I need to make the payment. That terms will be decided between us. Okay, I have taken the machinery from his premises. I am using that machinery for my manufacturing process. Okay, and timely I am making the, you can say, payment also to him. Okay. Say for our agreement was for 3 years. I need to make the installment payment for 3 years to him. After 2 or 2.5 years, I am now no more, that machinery is of no more use to me. Okay. The use of that machinery with respect to my manufacturing process is done. Okay. Now I have, we can say, shifted to another process. So there is no use of that machinery. What option do I have over here? I can stop the payment, okay, of installment, and what the vendor will do, Mr. A will do, he will take away the machinery. Obviously, whatever I have paid till now in the form of installment, I don't have right to get anything of that. That is for what use my machinery. I've been using it for so long, 2.5 years. So that I can specify as a rent paid for making the use of that machinery. I won't be having any right to get any amount back out of it. That amount is gone. Okay. And apart from that, being on the defaulter side, I refuse to purchase the machinery. Okay. Under installment system, you can't do that. Under installment system, you can't refuse that. No, I don't want this product now. But under hire purchase system, you can do, though, you can refrain from purchasing the product, okay, by stopping up the installment, and the possession of the goods will get to the vendor. So you will be no more the possessor. You will no more be under the possession of goods and services. You will not have the rights. Apart from that, you didn't have the ownership from the beginning. That ownership is only transferred after the payment of the last installment. Say, for example, I have paid the last installment. Okay, then I can have complete right to get the ownership also of that machinery if I wish to continue with the use of that. Okay, so this was the we can say summary with respect to the hire purchase system. Okay. Introduction to hire purchase system states that it is a special system of purchase and sale of goods. I am purchasing, Mr. A is selling to me. Okay, that is as good as buying and selling of goods. Under this system, what happens? The purchaser, here I was the purchaser, pays the price of the goods in installment. I am paying the price for the machinery, but in installment. The installment may be annually, once in a year. It might be 6 months, once in every 6 months, that is twice in a year. Quarterly, after every 3 months, 4 times in a year. Monthly, 12 times in a year, or fortnight, that is after every 15 days. Okay, whatever that is needed to be agreed between the buyer and seller. Vendor and the purchaser has to agree on this term. Under the system, the goods are delivered to the purchaser at the time of agreement before the payment of installment, but the title on the goods, which is also known as ownership of the goods, is transferred only after the payment of all the installments as per this system. The special feature of this type of system and transaction is that payment of every installment is treated as payment of hire charges. Here, the amount, whatever you are paying, okay, it's not called as installment. It is known as hire charges. It's known as installment under installment purchase system. But under this system, it is known as hire charges. By the purchaser to the hire vendor till the payment of the last installment. After the payment of last installment, what happens? The amount of various installment paid is appropriated towards the payment of price of goods sold, and the ownership is transferred to the purchaser only after the clearance of all the installments which were agreed between them. Now, there are some conditions which are needed to be satisfied if you successfully want to enroll for the hire purchase system. So, hire purchase transaction where goods are sold to the purchaser should follow the certain following conditions. The first condition is the goods will be delivered to the purchaser at the time of agreement. When you enter into an agreement of hire purchase known as hire purchase agreement, when you enter that agreement, when you sign it, at that time only you have to deliver the goods. You can't say I will deliver after 2 installment payment. So according to the system, as soon as you get into the agreement, you have to transfer the goods. Purchase has the right to use the goods delivered. Okay, you have transferred the goods. You have transferred the machinery to me. Mr. A has sent the machinery to me. But he is saying you can't use the machinery for 2 months until you pay 2 installment or 2 hire charges. This can't be the condition. As soon as I have received the goods, I can use them. I have the right to use them. I am the purchaser. Mr. A is the vendor in the scenario. The third is the price of the goods will be paid in installments, not at once. Every installment will be treated as the hire charges. If installments are paid as per the agreement, the title will be transferred to the purchaser after the payment of the last installment. In case if there is a default on the side of the purchaser, I'm the purchaser, if I have made the default, I have missed the payment of any of the higher charges, the vendor will come and take away the goods from me under my possession, okay, and he will not going to refund me any of the amount which I have paid till date. These are the conditions which are needed to be satisfied under hire purchase agreement. Now, the differences between hire purchase versus installment purchase. Both hire purchase and installment sales are popular methods of financing goods. There are three parties in hire purchase trade, namely seller, financier, and the buyer. Whereas with respect to the installment sale, the eligibility is only with respect to two parties. Under hire purchase, what happens if you are making the arrangement of the finance, okay, from the any other party, any other individual, then it will be termed as the three-party involvement. Now, there are certain points mentioned over here which give us the clarified difference between the two systems. The first is what is the nature of contract. When we talk about hire purchase system, it is hiring goods system. Now, I hope everyone is aware about the meaning of hiring. To hire. Yes, anyone? What do you mean by hire? Your voice is too low. Still not audible, dear. Please check up your volume level. You can even write it in the chat box. Yeah, I've got the answer in the chat box. Okay. So is it it's as good as hiring? Okay. The system of buying goods by making regular payment until the full price is paid. What about the installment system? It is an agreement of sale. Here you can't deny that I am not interested in making the buying this good. Okay, you can take it back. Have you heard anyone saying that if you are buying a cell phone or any electronic item, say television or refrigerator or air conditioner on installment, after paying some installments, you can't say I am not interested in your goods, take it back. You can't say, because you have entered into agreement of sale. You have agreed to buy that. Only you are pending to make the payment for that. What about ownership? When we talk about ownership, hire purchase system, ownership is still in the hands of the vendor, that is the seller, until the final payment or final installment is made. Under installment system, ownership is transferred to the buyer at the time of transfer of goods. So possession and ownership both lies with the buyer. And under hire purchase, the possession is with buyer, but the ownership is with the seller. Third point of difference talks about rights. Under hire purchase system, the buyer cannot sell, cannot destroy, or cannot transfer the goods because he still don't have in the ownership of goods. How can he sell them or how can he destroy them? Okay, at the time of say selling of the good, any machinery, I have made purchase that on hire purchase system. I can't sell it to the third party. He will say, show me the papers that you are the owner of the machinery. I don't have it. That is the reason why the ownership is not transferred under hire purchase system, basically. Okay, so I can't, obviously I can deny it. Okay, so the ownership is not transferred, so he has no right, the buyer has no right to sell, to destroy or transfer the goods. Whereas under installment system, you can sell, you can destroy, you can mortgage, or you can transfer as per your wish. Only there is a need, the need is that you have to compile with the payment of installments. Okay, next is risk. Under hire purchase system, what happens? All the risk are borne, all the risk are on the shoulders of the vendor, that is the seller, because he is still the owner of the goods. If any damage or anything happens, okay, so he will be the one who will be the responsible for that. Under installment system, what happens? All the risks are borne by the buyer. Say, for example, you have bought a new phone today, okay, on 6-month installment basis. After 1 month, you have broken your phone. So you have to pay whatever amount, whatever charges are applicable in its, okay, repairing thing. The seller is not eligible to take up the risk for that. You are the owner, so risk is with you. So ownership risk always is attached with the ownership title of the goods. So your title under hire purchase, the title is with vendor. So risk is also with vendor. Under installment purchase, the title of the goods is with the buyer. So all the risk is also with the buyer. Next is right to return. Okay, under hire purchase, you have the right to return the goods before making the final installment. Just like I said, after 2.5 years, I felt that I don't need that machinery anymore. So I can call the vendor and tell him to take away the machinery. Okay, but in case of installment, I can't do that. I can't call the, we can say the shop owner and tell your phone, I don't want your phone anymore. You can take it back. So under installment system, you don't have option to return. Okay, you don't have any right to return the goods, but under hire purchase, you have that right. Repair and maintenance, the liability for repairing, for maintaining of goods lies with the seller. Under installment, it lies with the buyer to protect the phone from everything. Every uncertain thing is my responsibility. And with respect to hire purchase system, the responsibility lies on the shoulder of the seller. Forfeiture of installment paid. Under hire purchase, we can say in case of a default in payment of installment, paid installment will be forfeited and treated at higher charges. Just like I said, the vendor is not going to return anything which I have paid to him till now. And this act is not at all applicable, activated with respect to installment system. Now, journal entries in the books of hire purchaser and hire vendor. Hire vendor represents the seller and hire purchaser represents the buyer of the goods. Okay. Now, there are two methods for recording hire purchase transaction in the books of hire purchaser. Purchaser refers to buyer of the goods. First method says when the asset is recorded in full cash price. Okay. And second method says when the asset is recorded at cash price actually paid in each installment. Okay, which is also known as actual cash price method. So it depends upon your accounting preference that which method you are following. Now, what different journal entries will be passed in the books of the hire purchaser? We'll have a look. Now it will seem to you just the information about the journal entries. You get to know how the actually journal entries are created and passed when we will do the illustrations related to this. Okay. First is when you purchase the asset. For the purchase of the asset, you are a hire purchaser and you have made the purchase. And according to your accounting method, you are recording the asset at the full cash price. Okay. In that scenario, what will be your journal entry in your books, in the books of hire purchaser? Asset account debit to vendor account. Okay. With respect to second method, when you are, say for example, you are making, you are not recording at the full cash price, you are making a recording in your books at the whatever installment you are paying. Okay, so you have not made anything payment till now. Only you have entered the agreement and you have taken the possession of the goods. So you have not paid anything yet. You will start paying in installments. So with respect to that, you don't have to pass any entry. If you are following second method, that is you are recording at the actual price paid. First method, total price. Second method, what actually you are paying. So under first method, you will pass the journal entry, but under second method, there will be no journal entry. We are talking about in the books of the hire purchaser, or you can even think that it is these journal entries are in the books of the buyer. Okay, you can consider yourself as the buyer or you can consider yourself as the seller as you think fit. Next is for the payment made for down payments. Say, for example, you are making something as a down payment. So what will be the journal entry? First method, vendor to bank. Second method, asset to bank. Okay. Next is your installment is due. Under that, first method, you will say interest account debit to vendor account. And under second method, you will pass the journal entry as asset account debit to interest account. Now you will think why you are debiting the asset over here, and in the first entry, why you are showing as the interest. Because under first method, you have already recorded asset as yours. Okay. So cash price, you have making the accounting on the cash price. So asset is always yours. So you are paying installment, your due installment is you. That means you are paying something. Okay, and as an expenditure, you are recording it. But under second scenario, you are making the recording of the asset under hire purchase with respect to what actually you have to pay. Okay, that is the reason why here whatever for whatever amount, whatever installment is due, that much asset will come to you. That is the reason why asset is being debited in the second method. Okay. Then payment of installment for both the methods, same entry will be there. Vendor account debit to bank account. Vendor is the one who will be receiving the amount of installment. So debit the receiver, you have to debit and would credit what goes out. Bank, that means cash goes out from your hands. That is the reason bank is being credited. So vendor account debit to bank account. Next is for charging depreciation. Depreciation charging entry is common for both the methods. Depreciation account debit to asset account. For transfer of interest and depreciation, at the end of every year, you must be aware about, you must have done in some of your previous classes, the depreciation accounting. Okay, where when the year changes, what you do, you accumulate the amount of depreciation you put in the profit and loss account. After 1 year ends, what we do, we prepare trading account, profit and loss account, and balance sheet. So what in the profit and loss account, what we show? We show all the expenditure. Okay, now we are paying the installment. We are putting up the depreciation, that is expenditure for you. So you have to show it in the profit and loss account. So at the end of the year, what you will do, you will transfer them to the profit and loss account. So you will be transferring both interest as well as depreciation. For transfer entry will be profit and loss account debit to depreciation to interest account. Now this third, fourth, fifth and sixth entry, whatever we have seen, will be repeated. First and second entry will not be there, because you will not purchase the asset again and again. You are not going to make the down payment again and again. Every year you don't make the down payment. That is made only once. So what will be repeated? Third entry, installment due, installment paid, depreciation and transfer to profit and loss account. These four entries, entry number 3, 4, 5 and 6 will be repeated every year. Okay, say for example, you are told to prepare the hire purchase accounts for 3 years. Okay, so for next 2 years, you will repeat only 4 entries for the second year, for third year. First and second entry will not be repeated, just like in the case of depreciation you used to do. You used to purchase the asset one, but you used to calculate depreciation every year. So every year you only have to copy paste the depreciation entries. You don't copy paste the purchase entry also. Here also, first 2 entries will not be repeated. Only 4 entries will be repeated. Okay. Now this was in the books of the hire purchaser, that is the buyer. Now we will talk about what journal entries will be passed in the books of vendor. Vendor here represents the seller who is selling the goods. So what will be the journal entries in his books? First, for selling the goods on hire purchase, he will pass hire purchase account debit to sales or hire purchase sales account. Next, for receiving the down payment, he is receiving the down payment, cash or bank account to hire purchase account. Now here hire purchase represents the assets. Next, for installment due, hire purchase account debit to interest account. For receiving the installment, cash or bank account to hire purchase. The entries in the books of, say, you can easily make a comparison and conclude that books and entries in the books of the hire this vendor is comparatively easy. Yeah. For transferring of interest, interest account debit to profit and loss account. Depreciation will not be charged by the higher vendor. The seller is not going to, because he is not possessing the asset. Who is having the asset? Seller, buyer is having the asset. Do I have the asset? Mr. A doesn't have the asset. It is with the buyer. So buyer is going to charge the depreciation. Why I don't? What should I say? I am charging depreciation on which machinery? There is no machinery in my premises. So if I am not having the possession of the machinery, I can't charge depreciation on that. So depreciation will not be charged by the higher vendor. So here only 3 entries will be repeated, 3, 4, and 5. First 2 entries will not be repeated, which were regarding the purchase and down payment. Okay. Now, we are coming with the meaning of default and meaning of repossession. Now, what do we mean by default and what do we mean by repossession? Now, if I am the buyer of the goods, Mr. A is the seller. So default will be done by me and repossession will be done by Mr. A. This we have already seen. Okay, this we have already talked about. Say, for example, I am the defaulter. I am not making the payment of installments now. I have stopped making installments, payment of installments, say for example. So I will be considered as a defaulter. That is the defaulter. And what Mr. A is doing, he is the seller. What he is doing, he is coming and taking goods away from me. He was having the ownership title. Now he's taking possession of the goods also. And he's taking away my right to use that good also. That is repossession. To possess the accounts, possess the goods back from the buyer. Okay. So he will come and he will take away machinery from me. That is repossession. And if I am not paying the installment, I will be the one who will be in default. Okay. That is default and repossession. So default is failure to act, appear, or pay. That is failure to meet the obligation. It was my obligation to make the payment for installments, but I am at, we can say, at the failure part. I'm not making the payment, so I will be in default. The hirer can be an obligation to pay last installment, so the ownership of the goods smoothly passes to him. But if he fails to meet this obligation, he will be treated as default on his part. Now, possession of good means physical holding of goods. Okay, the machinery is lying in my factory, so I am the possessor. It is under my possession. You know that under hire purchase agreement, the vendor transfers the possession, but he doesn't transfer the ownership. And if hirer fails to pay even the last installment, he have paid all the installment, only last installment was pending. Even that is also not paid. He has the legal right to cover the possession of the goods. Even one installment, out of 30, I have paid 29 installments. Only one installment I have not paid. Then also he can come and he can take away goods from me. This is his legal right. Act of recovery of possession of goods is known as repossession. Now, what will be the accounting treatment with respect to repossession? Say, for example, complete repossession has been done. Okay, he has taken the complete goods away from me. All the entries till the day of default are passed in the usual manner. Whatever entries we have seen till now, that everything will remain same. After that, when the default happens, when I refuse to pay the installment, after that, these entries will be passed. First, we will see in the books of hire purchaser. What entries will be passed? For closing hire vendor's account. Obviously, if repossession is done, I have to close the account of hire vendor. So, hire vendor account debit to asset account, the complete opposite entry, which we have done earlier. For closing the asset account, if the book value of the asset exceeds the amount due to the hire vendor. If what amount is due, which is needed to be paid, okay, that amount is lesser and book value of the asset is higher. In that scenario, profit and loss account debit to asset account. Okay. And if the book value exceeds the value of the asset, Then asset account debit to profit and loss account. You have to make a comparison. What is more, which amount is more? Whether the book value of the asset is more or your whatever amount is due, that is more. Next, in the books of the hire vendor, we have seen the entries in the books of hire purchaser. Okay, now we will see what entries will be passed in the books of hire vendor. Now I have already told you that this entries will be clear with you when we will do the illustrations. Okay. Right now you have to focus on what all entries are passed at what occasion. So on repossession of goods, what entry will be passed? Goods repossessed account debit to hire purchase account. For amount spent on reconditioning of goods. Say, for example, you have repossessed that goods and you have made certain expenditure, okay, on making that goods in the proper condition. It's not necessary that purchaser has taken a very good care of your goods. It might happen something is not correct, is not right with the goods. Okay, so for example, it happens with, it can happen in case of machinery. If oiling is needed, repairing needed, maintenance is needed. Okay, so that if you have done, and you have spent some amount on the reconditioning part, just like we need our air conditioners to be repaired every now and then. That is needed to be, servicing is needed to be done. So under that scenario, what journal entry? Goods repossessed account debit to cash or bank account, since you have made an expenditure with respect to repossessed goods. For sale of goods repossessed, if you have sold that goods, cash or bank account debit to goods repossessed. You are getting the cash in bank, and what goes out, whatever goods you have repossessed are going out. So you will credit them, and what you will debit, cash or bank account, since you are getting the cash or bank. And if you have incurred any loss on that, okay, you have that goods say worth rupees 30,000 and you have sold it only for 20,000. So you have incurred a loss of 10,000. Under that scenario, journal entry will be profit and loss account debit to goods repossessed. Every time when you incur the loss, you have to debit the profit and loss account. And when you incur a profit, you have to credit profit and loss account. Next is in case of partial repossession. You are not repossessing wholly, but only part is being repossessed. In that scenario also, all the journal entries till the time default happens will remain same. After that, in the books of hire vendor, what journal entries will be passed? On repossession of goods at an agreed value, the entry will be goods repossessed account debit to hire purchase account. Now, talking about the accounting method for hire purchase transactions. Okay, how many methods of accounting are there when you talk about hire purchase transaction? So there are 4 methods. First one is known as cash price. Okay. 4 methods are there, which we are going to see now. For that, you should be aware about 3 terms, meaning of 3 terms. First is cash price. What do you mean by cash price? Cash price means that price which will be paid if asset is purchased on cash without installment. If you make a purchase, whatever amount you have to pay, that is known as cash price. Higher price. Okay, that is cash price plus interest. You have to pay the interest. If you opt for EMI, you have to pay some interest. Okay, so cash price plus interest will make higher price. And third is down payment. At the beginning of the deal, whatever amount you pay is known as down payment. Okay, so these are the 3 terms, and there are 4 methods under hire purchase system. First method is known as cash price method. Cash price, that means you are making a purchase, making just like the normal transactions, we can say. Under cash price, the deal for hire purchase transaction looks just like normal transactions. When transaction or event happens, we record them. What journal entries will be passed at the time of buying the asset on hire purchase? Journal entry will be asset on hire purchase account debit to vendor account. For paying the down payment, vendor account debit to cash or bank account. When interest is due, interest account debit to vendor account. So whenever you are due to pay something, you will credit the vendor and you will debit whatever you tend to pay, whether you are going to pay the installment or whether you are eligible to make the down payment. Then After the due, you are paying the installment. So vendor account debit to cashier bank. Vendor is the receiver, he will be debited. For transferring interest to profit and loss account debit to interest account. For depreciation account to asset account. And if asset is returned back, when higher vendor account debit to asset account. Second method is known as interest suspense account. Now there will be two additional journal entries which you have to pass under this method. It will be clearly mentioned in your problem at the end that which method of hire purchase is being followed in the books, or you have to do the pass the journal entries using which of the method. They will specify the name of the method. In this method, what happens only, you have to pass two additional journal entries, which you can see over here right now on the screens. Okay, now what happens under this screen? You open a suspense account. Okay, and whatever interest or whatever installment is you have to collect now for installments, what number of period, say every month you have to collect 10,000. So whatever will be the total amount, what you will do, you will make a total of the amount and you will put up in the suspense account. So whenever you will receive the amount, you will take it from the suspense account. Okay, and you will treat it. That is the only difference. See, under this method, what happens? We open interest suspense account. All the interest which is not paid on hire purchase asset will go to the interest suspense account. When interest will become due, this account will be debit and interest suspense account will be credited. So two additional journal entries, transferring of the total interest suspense account debit to hire purchase account. Okay, so now here what you have done, you have debited the suspense account. So whenever you will receive the installment or interest, you will credit the suspense account. And what you will debit the interest account. Okay, these are the only two additional journal entries which will be passed. The rest everything will remain same. What about in the books of the hire vendor? There also two additional journal entries. Okay, and when first for opening of suspense account, transferring to suspense account. Next is when interest will be due. So two additional journal entries in the books of vendor, two additional journal entries in the books of buyer. Third method is known as the trading method. Now what happens over here? What you have to do over in this method? You don't have to open any account. Okay, ledger account you are not concerned with. Here you are prepared trading account. What we do in the trading account? We write opening stock of raw material. Okay, then what purchases you have done. Now what sales you have done. Closing stock of raw material. Similar will be done over here. Okay, what is the stock, opening stock of stock with hire purchase agreement? What additional hire purchase you have done? Okay, what goods additional you have sold on hire purchase? Out of that, how much cash you have received on this hire purchased? Okay, how much installment is due, but you have not received it? And at the end, the closing stock. At the end of the year, how much goods are still there for of yours under hire purchase system? So the complete record of system is not done in ledger accounts, but it is maintained using the trading account. That is done under third method, which is known as the trading method. The fourth and the last method is very confusing. Okay, here what you have to do, here you have to maintain stock and debtor method. Okay, when installment you are eligible for taking up the interest, okay, taking up the installment from your buyer. So they will act as your debtor. Okay, and whatever goods are possessed under hire purchase system, that you have to act as your stock. Okay, and instead of the common names, you have to use the name stock and debtor over here. So how this works? In this method, hire purchase stock, hire purchase debtor, and hire purchase adjustment accounts are maintained. Normal accounts adjust, hire purchase vendor, or you can say these accounts are not used. Instead of that, the name of the accounts are changed. The accounting treatment will remain same, but only the names are changed. Instead of normal names, what you will use? Hire purchase debtor, hire purchase stock, hire purchase adjustment. These three accounts, with the help of these three accounts, you have to maintain your books. So what entries will be passed in the books of the vendor? that is seller. When goods are sold, stock account debit, hire purchase stock account debit to stock account to hire purchase adjustment account. Now the amounts, how you will specify what amount you will write in the stock account. What is the price for hire purchase? Hire purchase price, stock account, actual cost of the goods. Then hire purchase adjustment, the difference between two. Okay. When installment becomes due for payment, hire purchase debtors account debit to hire purchase stock account. So instead of crediting in normal scenario, the hire purchase account, you are crediting here the hire purchase stock account. Okay, the names are changing. The treatment remains the same. Next, when cash is received, cash account debit to hire purchase debtor account. Stock reserve account on opening stock. Whenever opening it stock reserve is debited. Whenever we talk about the closing, stock reserve is credited. You can see the opening and closing entries. Opening, under opening entry, stock reserve account is debited. In E entry, stock reserve account is credited. Rest everything remains same. Okay. So this is how you have to operate with the fourth method, which is known as stock and debtors account. This confusion will get clear when we do the illustration with respect to this. Okay, this was all about today's session. Any doubt, anyone? No doubts? Okay, then thank you so much everyone for joining. See you all in the next session. Till then, bye. Have a nice day and take care.